PayPal is expected to report earnings on October 29th. And although it's still a bit early, I think it's time to prepare for this earnings season, as the stock is almost up 40% on a 1-year basis and 34% on a 3-month basis. So let's look at some of the key metrics to look at, see how growth is doing, what analysts are looking for, and what things I want to hear from management in, well, both comments and their guidance. Now, if you think my videos are either informational, educational, or entertaining, make sure to hit that subscribe button, like this video, and leave a comment down below, because I love to hear what you guys think about my videos. Now, let's not waste too much time and just dive straight into PayPal. Now let's just start off with the basics. And like I said, I know PayPal earnings are still about 2 weeks away, but I figure I have a bunch of stocks to go through. So let's start with my biggest holding, and that's PayPal. So let's start with the basics. Currently, we are trading at $80.50, and this gives the stock a 19.5 PE ratio, which has been gradually increasing over the past few months. We see a next 12 month, a forward PE of 17.9, and once again, this has gradually been increasing. Now we can see quite a dramatic jump in the forward PE right here. And the reason being is that they changed around the metrics, or how they report on their non-GAAP EPS numbers. Because prior to this new management, which has been in place for the last about a year, they used to exclude stock-based compensation from the non-GAAP EPS numbers. Well, that made the number look really good, and that made sure that they had really high non-GAAP EPS numbers. But it is an expense, a non-cash expense for investors. So the new management said, we are going to include this. That made the non-GAAP EPS drop a bunch, but it is a more fairly representation of the business and the costs they are making. Now, this is also what we can see when we look at the EPS numbers. We see $4.41 of expected EPS for this year. And we can see that this is a downtick compared to last year, a 13.46% downtick from last year. But remember, this is with now including stock-based compensation. In their financial reports, PayPal use a big recalculation at the end of their presentation or at the end of their slides, which you can look at yourself. And there they justify how these new metrics compare to the old ones with the new costs included that they excluded previously. Now, if we look at the metrics that I will be keeping a close eye on for the upcoming earnings report, we start off by the total payment volume mix across PayPal's payment platforms. And why? Well, there are basically two very important parts in it. The first one being the branded checkout, the top one. This is the PayPal payment button. It's the most profitable side of the business. And as we can see from the percentage of total, so the blue letters here, the blue numbers here, we can see that it's conducted of 27% or contributed 27% to the total payment volume for PayPal. This grew 6% year over year. And nobody is expecting crazy growth here. Just keep it at 6 to 7%. That should be fine. But then the part below it, the PSP, the unbranded card processing, this is Braintree. And what we can see is quite a collapse in their growth metrics. We see it now at 19% for the last quarter, compared to 28% for the prior year and 26% for the prior quarter. Now the reason for this is quite simple. Because with the new management, they want to go for profitable growth. And profitable growth also means healthy margins. And Braintree was priced in order to take market share, not to be profitable or not to be as profitable as it should be. So under new management, they said we're going to price Braintree to the value it brings. And we can see that in the growth number. The growth has slowed down a bit, but this persists of 37% of the total payment volume for PayPal. So Braintree is very important, and I like that they try to price it to value, but it shouldn't take the growth down too much. Now 19% is still very impressive, and I wouldn't want to see this number go down very much more. Anything under 15%, I think there it becomes an issue. Okay, now what other number will I be looking at? That is the transaction margin, and here we have the details. Because if we look at the bottom line First and foremost, we can see that the transaction margin has been shrinking on a year-over-year basis very aggressively in each of the prior 5 quarters. Now, last quarter, it was only shrinking by 19 basis points, and this was the best number they have seen in a long time. And this trend should continue, because this will be key. If they manage to get this to a positive number, that would kind of create the feeling that this turnaround story is completed and that PayPal is back on track to being a good company. If this all of a sudden drops once again, then it becomes a bit more iffy, right? Okay, so this will be the number that will be most in focus, right? This is the key here. Now that brings us to what analysts are expecting for PayPal. And I will lay this next to the guidance that PayPal gave us in a second, but let's first look at what PayPal is projected to do, or what analysts expect PayPal to do. Because starting up, we will have revenues of 7.871 billion, which is a 6% year-over-year growth number. So still in the 6%, it's slow growth, but it's stable growth, right? Because if we look prior, we have 8%, 8%, 9%, 8%. Well, this quarter is expected to slow down a bit, but next quarter, 5%, almost 7, 7, 8, 8. We can see a very steady and stable story here. For the gross profit, expected 3.8 billion, or a year-over-year change of 3.8%. So we do see a slight mismatch here between the year-over-year revenue growth and the gross profit growth. That's something to keep a look at. Now, if we then look at the adjusted net income, right here we see $1.094 billion, which will be a year-over-year change of negative 23%. But once again, we can also see the same thing at the adjusted EPS. It's $1.07 and a negative year-over-year change of 18%. Well, basically, that's those things they include now, which they excluded prior, right? So that's all basically due to the transparency of the business itself. If we look at the GAAP EPS, they are expecting 98 cents, or a 5.3% increase. So they are expecting lower adjusted net income, but higher GAAP EPS. So, that's just due to those numbers that will be excluded now. Now, analysts are expecting 1.5 billion in free cash flows. And this is quite important because the free cash flow of this business has been quite stagnant. So you want higher free cash flow, you want higher free cash flow per share, but this has been very steady. Now they are buying back a lot of shares. We know this. That's part of what's so attractive about PayPal. So this will increase the free cash flow per share, of course, a bit. But they are now expecting PayPal to actually increase that free cash flow. And that's very important. Now then, just on the margins side of the business, we are expecting 44.45% gross margins, or analysts expect that, of course. We see net income margins on an adjusted basis of 13.9% and an EBITDA margin for, however interesting that may be for this business, of 20.05%. In my opinion, it's not that relevant, an adjusted EBITDA margin for this business, but maybe for some it is, so I'm just throwing it out there. Okay, so then to compare this to the guidance that PayPal gave us, we can see that analysts expect a GAAP EPS of 98 cents. And in their guide, PayPal gave us 96 to 98 cents. Now they said mid-single digit revenue growth, so that's not all that impressive, like 5 or 6%. And that's also what analysts are expecting. 6%, I'd say that's pretty much in the mid-single digit range, right? And that kind of brings us to what I want to hear during either their guidance or in the Q&A sessions from this business, from PayPal, from the management. And let's start off with what I want to learn about the interest on customer balances, because they have large customer balances in it. We can see that right here. We see funds receivable and customer accounts. It's at 38.7 billion in the latest quarter. That's a huge cash balance they have there. Now, what they can do with these customer funds is invest it in short-term treasuries, And they will earn interest on the cash invested there, of course. And that's, well, what is positively contributing to the transaction margins. Now, interest rates are going down, which will mean that the interest earned on those assets are going down as well. So what are they expecting from this? How will this change the transaction margin expectations? Will this still be a positive growth number for this metric? Or will the transaction margins now start going down? I want to hear about it, because they can offset the loss in interest earned by increases in the price for Braintree or for Fastlane. That's another thing I want to learn about. Because from what I understand, Fastlane should add positively to that transaction margin. So I want to learn more about it. And I think questions will be asked regarding this, but also about the growth for that platform. Because we know they now have partnerships with Fiserv, with Adyen, and we have heard very positive messages from the PayPal team regarding the first data this product had, while still in the beta. So now that it has been rolled out and people are actually using it, how are the actual numbers? How does this contribute in reality? I want to learn more about it. Now then, there are just two more things, with the first one being Venmo, because we know that they say that they have a lot of monetization options for Venmo, because it has been under monetized basically. We know that they are pushing innovations, now being able to schedule transactions basically between parents and children. And they are trying to get more use cases for Venmo. But I want to learn more about it. I want to know what they plan on doing with it, how they want to, or what direction they want to take it. How will Venmo be unique basically? Now, what are some further innovations? They may give us some hints. I'm not all too sure, because they're not going to give away their business secrets, of course. But I want to learn more about what they plan on doing with Venmo. And then finally, I would like to know about their guidance. Are they still guiding for the same growth this year? Are they still going to play it as a transition year? Or are they now going to switch it to, we are starting to see results, we are starting to see positive momentum, and the transition is coming to fruition? Now, that's what I want to learn about. That's what I want to hear about. And I would absolutely love it if they manage to increase their guidance. Because we can see the stock now at $80. It peaked out for now at around 82. And this has been coming all the way from the 60s. Mid-July or the end of July, we were even still in the 50s. This stock has been absolutely shooting up because we saw that positive transaction margin dollar data. We see a lot of positive news regarding this company. And this should continue. This should keep happening, and this momentum should be pushed forward. And if they manage to do so, this will be a lovely stock, and this will pay out handsomely. And even now, it would still be undervalued. Because I think with that 6 to 8% revenue growth, mid double-digit revenue growth, or EPS growth, I'm sorry. So at that 12 to 15% EPS growth, this company should take a 25 to 28 forward PE ratio. Now we are currently trading at 18, so there is still a lot of room for multiple expansion. And this is only with the current products. This is without the ads platform. Maybe we will hear more about that as well, but I'm not really counting on it. Now, if you enjoyed this video, you think you learned some new things, you found it educational, informative, whatever, make sure to subscribe to my channel, and I hope to see you in my next video. Thank you for watching.